Hi everyone, I hope you guys are good. Today I'm going to be showing you how to utilize our 7-Eleven model using Fair Value Gaps. So I just want to make you understand and make you see the importance of Fair Value Gap at a specific time and a specific price action. So I'm going to firstly explain the 7-Eleven model. As you can see here, we have a lot of videos explaining this, so you can just check it out if you feel that you don't understand on this one. As you can see here, we have the 1 a.m. candle. So, excuse the sound. I literally live a few blocks away from the airport, so aircraft are very close from where I live. So here you have the 00 hours, which is the midnight opening. Here is it here. Then we mark the 7 a.m. Candle. Then we wait for price to create relative highs and low. While the price is displacing low, created this high and this high and created this low and these lows around here. And once the price is busy consolidating here, wait for price to run to one side of liquidity, either the buy side or the sell side. So in this case, the price went to this 15 minutes fair value gap, which I won't show because I don't want to drag this video. But basically, we have this true open here. The simple rule about the true open is you buy below the true open. So I want to start making live trades, making live lessons. So if you could just subscribe to my channel, I'm gonna be able to trade live and explain more about what's the true open because they are very important in your trading. True open. Midnight opening range, how to utilize the Fibonacci. I'm gonna be giving you the Fibonacci settings on those videos. So just hit the subscribe button so you can be able to connect more. So right here we have this relative highs. We have this New York True Open. The price consolidated and traded lower to this 15 minutes fair value gap. Then the price traded higher. So basically, we would have taken an entry from here. I'm just gonna. I did take this execution. I'm gonna pop up the picture at the end so I can show you how I took entries and my exits on my MT5. So this is the first entry that you have. So then the price, because the price took out the sell side liquidity into this 15 minutes fair value gap, you took this entry first, and then the price traded higher, breaking this highs here, and then traded lower to this fair value gap that's below the London True Open. So you have to buy below a True Open. Whatever price section, whatever pair you're trading, there's always a True Open in each and every asset class. So I'm gonna make maybe another video to tell you how the true open works, the specific time for a true open, but the rules are as simple as this. So we have this fair value gap below true open. So this true open validates this fair value gap to a bullish run. So now we have also this second entry that you can take from here. Then to find your initial target, you just take your Fibonacci. As I told you, we're gonna be making live trades. So make sure you hit the subscribe button. So I'm going to be showing you how to use the Fibonacci, what are the settings that we use, and what deviation that we use. So in this case, we have a second standard deviation, which in all of my videos is always the target. It's always, if you've been following me, you will know that I always use second standard deviation for exit and execution. So I'm just going to highlight it here, second standard deviation. Um, and then I'm gonna remove the fib. But why did I choose this range here? I choose this range to measure the deviation because this range is the one responsible for taking out the sell side liquidity. If it was if the buy side was taken out first, I was gonna measure from this favorable gap to the original consolidation. So because it's the sell side that's been taken out first, I'm marking from the consolidation to this sell side liquidity. That's the 15 minutes fair value gap. Then the price, here's the second standard deviation for target. This I use for target every time. If you've been following my video, my channel, you already know that we use the deviations for exits and the end entries. Yeah, so this is the second standard deviation, which is basically above the London high. So this is going to be a very good target for a price run. So the price traded higher to this true open, and we took a buy below this true open. I'm going to show you the executions on the MT5 at the end here. So now the price has run to the midnight open. Midnight open works exactly the same as a true open because midnight open is basically the day true open, the true open of the day. Then a London true open, as I've imitated here, L true open, that's the London true open. That means there's a session true open, there's a London session true open, there's the London true open, there's a New York True Open, there's an Asia True Open, and there's a New York PM True Open. So we have those specific times where there's a true open of the day, true open of a session. There's also a true open of the year, of the month, and all of that. So I'm just gonna make a video. You can just check out day videos. I'm gonna pin in the video of day trading. He's the one that came with the true open. ICT came up with the strategies and all of that, but they came up with the true open concept with the quarterly shift. Quarterly shift. So you can just check out these videos, and I'm gonna try to make another video regarding the true open. So this is the third entry. If you can just look at the time, it's 3 a.m. UTC. That means it's a silver bullet. And if you're familiar with the silver bullet, this was a silver bullet entry. This one here, silver bullet entry. So you can see the price traded lower on this Fair Value Gap that's below the true open or the midnight opening. So the midnight opening is very important. You know that you always buy below midnight opening if you are bullish, or you always sell above midnight opening if you are bearish. So in this case, we are bullish at taking this London high and then our second standard deviation. Then we use this Fair Value Gap that's below the midnight opening. Then we took a buy from it. Then here we have our initial target. This is where you basically took your exits here. This is where you took your exits here. Right here we had a 15 minutes fair value gap here, but I couldn't mark it. I just remembered now, so I cannot like go back to 15 minutes time frame because it's gonna drag the video. I don't like my videos to be long, but yeah, this it was supposed to be initial target. So right here we have another fair value gap here. This fair value gap here, we used it because it's the one that took out the price side liquidity. After a run on liquidity, there's always going to be a fair value gap that the price retraces to, and then price continues high to hit the the worst case exit of the day. So if you can understand time and price and understand your PDR rates, which is your fair value gaps and your true opens and your midnight opens and all of that, it's gonna be simple for you to trade this model because basically it's as easy as marking the 7 a.m. candle, the price created displacement, create relative highs and lows, then you trade to take out the sell side liquidity or the price side liquidity depending on the market that you are, you're in a bullish market or a bearish market. So in this case, we end up in a bullish market. It went to the higher time frame PDRA. It traded high and took out the buy side with the fair value gap below the true open. Then we take this buy from this true open here. Then you go long. Then midnight open, still the same. You just treat it the same as the true open here. Then you're targeting the second standard deviation, and you already have consistency in your trading. Some people would think that this trade is short, you cannot make much money of it. But if you can just trade the simple model like this on a daily, you cannot be able to make more money than a person who thinks this thing is short. You want to trade 10 times a day. But in this case, you only have to trade one session at a specific time and a specific day at a specific price action. So I hope you find this video insightful. For more of these gems like this, for more of the live executions on how to trade, on how to utilize these models, on how to find good entries, good fair value gaps that you can use. Because if you can check here, we do have fair value gaps that the price didn't run back to. You see this fair value gap, the price didn't run back to, but it did run to these ones because they have specific levels that's all that you need to focus on in order for you to find a specific entry. So please subscribe to my channel so we can be able to make more lessons, make more life executions, and yeah, let's just create a community and find consistency in our trading because this model is for every asset class, for every trading day. You can find this specific model. It's been derived from Caleb. A Caleb model. So this one is Ambition 711 model. It's way different than Caleb model, but it's basically the same run on liquidity. So I hope you find this one insightful. Till we talk again in our next video. I hope you guys have a wonderful weekend. Cheers.